Vessels transiting the Red Sea have faced attacks over the past several weeks from Yemen-based Houthis, prompting shipping companies to change routes, leading to a spike in freight rates. Embarking on longer detours around the Cape of Good Hope in South Africa have pushed ocean freight rates by up to $10,000 per 40-foot container, as container ships have diverted more than $200 billion of goods away from the Red Sea waterway to avoid strikes by Houthi militants. U.S.-owned commercial vessel, the Gibraltar Eagle, was struck by Houthi militants on Monday, the U.S. Central Command said. Some market watchers expect the disruptions could bring about a reversal in fortunes of an industry that was mired in a recession last year. As to the higher rates in 2024, this could add multiple billions to the bottom line of the VOCC even if this lasts for just another 2 or 3 weeks, Alan Baer, CEO of logistics company OLUSA, told CNBC in an email. Vessel operating common carriers, VOCC, are ocean carriers that own and operate vessels responsible for managing cargo and transporting them. Maersk, Evergreen and COSCO are some prominent VOCCs. If this goes on for 3 to 6 months, the profits will again slowly approach 2022 levels as the operating expenses should be lower than what the carriers experienced during the 2021 and 2022 chaos, Baer said. The global shipping industry has been in a slump, dragged down by high inventories and consumer spending pullback which led to several bankruptcies last year. Before the Red Sea attacks, global shipping container rates had more than halved from 2022, a stark reversal from the boom following the pandemic. Asia-Europe rates averaged around $1,550 per FU in 2023, but have now more than doubled to over $3,500 per FU. A recent Jefferies research note said. FU is a standard unit for measuring for a 40-foot shipping container capacity, which is usually the largest standard size for container vessels. When we were in November, we pretty much saw the bottom. The rates were just bottom of the barrel, said Paul Brashear, vice president of drayage and intermodal at its logistics. He noted that the abysmal rates extended to not just shipping but also trucking. This was not always the case. Container shipping companies earned profits of $364 billion in 2021 and 2022 combined, according to data from the John McCown Container Report, an industry compendium, which are jaw-dropping when compared with the cumulative loss of $8.5 billion that the industry saw from 2016 to 2019. But the industry's net income plunged 95.6% year-on-year to $2.6 billion in the third quarter of 2023. While the recent spikes in freight rates might not help shippers relive their glory days following the pandemic, they would substantially boost profitability. Container liner profitability is expected to recover in the first quarter of 2023 with the current price hikes, ING's senior economist Nico Luhmann said in a report last week.